Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings, although sometimes they make absolutely no sense at all. Today we're diving into a Schedule 14A filing from Amarin Corporation and get a letter from the chairman of the board that paints a picture of a company that thinks it's undervalued but is struggling to show it. What's the story? Let's find out. First up, a letter from the chairman. The key takeaway here is that 2024 was a year of advancing change and driving progress. They have a new CEO and are trying to take advantage of opportunities for growth. But here's the thing that always raises an eyebrow. They say their stock is significantly undervalued. This always leads to questions like, if it's so undervalued, then why isn't it performing better? What are they missing? Okay, but there are some good signs. They mention revenues of over $200 million and a strong cash position of almost $300 million with no debt. That's the kind of financial stability any investor likes to see. Then the chairman goes on to discuss efforts to unlock the untapped global potential of their main drug, VSA-PRV-ZEIK, Akafe Gaia, talking about driving momentum in Europe, continuing efficient revenue in the US, and supporting VSC-VBSS, AKPI Research. Now let's move on to the official notice for Amarin's annual general meeting, scheduled for May next year. This is where shareholders get to vote on important stuff. We see several resolutions for shareholders to vote on, such as re-electing board members. Then there is an important resolution to approve Ernst & Young LF as auditors of the company. This is where shareholders decide if they agree with the company's auditing choice. Also, shareholders will vote on a resolution to authorize the board to issue new shares. This is a common move, but it's crucial because it gives the company flexibility to raise capital. It's a statutory requirement that the board lay before the annual general meeting the company's statutory accounts. Alright, let's jump into the proxy statement itself. This is where the company lays out all the details about the proposals up for vote. Just a reminder about who gets to vote. Only shareholders who held shares on March 27, 2025 are eligible. Let's run through the directors up for election. The board has nominated a slate of individuals with diverse backgrounds. We have Aaron Berg, the president and CEO, plus a bunch of other directors with expertise in areas like finance, medicine, and the pharmaceutical industry. Shareholders also get to cast an advisory vote on executive compensation. This is a say-on-pay vote, and while it's non-binding, it's a chance for shareholders to voice their opinion on how the company is paying its top executives. Next, we have a resolution to approve Ernst & Young LL as the company's independent registered public accounting firm. This is pretty standard stuff, and the board recommends voting in favor. There's also a proposal to renew the power of the directors to allot shares, and another one about disapplying preemptive rights. This one essentially gives the board the flexibility to issue new shares without first offering them to existing shareholders. Companies like this, because it gives them flexibility, shareholders need to evaluate whether or not they trust management to not devalue their shares. Moving on, the company touches on corporate governance, including director independence and their code of conduct. They believe having a strong independent board is super important for making good decisions. The board also has standing committees like the Audit Committee, Remuneration Committee, and Nominating and Corporate Governance Committee. These committees oversee specific areas of the company's operations. Here we have some information about the executive officers. You can see the various executives and their background and roles within the company. This section covers related party transactions, meaning any deals between the company and its executives or directors. Companies are required to disclose these to make sure everything is above board. Now let's move on to section 16 on reporting compliance. This is about making sure that executives and major shareholders are reporting their transactions in company stock in a timely manner. This section shows who owns the company's stock, including the directors, executive officers, and anyone who owns more than 5% of the outstanding shares. Alright, time for the big one, executive compensation. This is where the company lays out how much it pays its top executives and why. It starts with operating highlights for 2024, including retaining icosapent ethyl market share leadership in the US and securing regulatory approvals in China and Australia. Here we see that after last year's shareholder meetings, they wanted to ensure that investor perspectives directly shape their approach to executive compensation. Shareholders wanted a stronger alignment between executive compensation and long-term value creation. The big thing to note as part of this review for compensation, they have identified that equity compensation is heavily weighted to option awards to encourage participants to work towards long-term appreciation in equity values. This area defines roles in determining compensation, meaning the Remuneration Committee, Compensation Consultant, and Chief Executive Officer. The Remuneration Committee benchmarks executive pay against a peer group of similar companies in size and scope. As for implementation, we can see they look at base salary, annual incentive bonus, and equity compensation subject to time and or performance vesting, so things are fairly standard. They have share ownership guidelines, which requires executives to hold a certain amount of company stock to align their interests with shareholders. Also very standard practice at this point, the company has a clawback policy, which allows them to recover incentive compensation if there's a financial restatement. Amarin prohibits engaging in hedging transactions, including the purchase or sale of derivative securities linked to company stock, to align executive and insider interests with long-term shareholder value. Now, let's dive into the juicy numbers, the summary compensation table. This table shows the total compensation for the named executive officers over the past 3 years. Let's look at Aaron Berg, who is the current CEO. In 2024, his total compensation was around $3.3 million. There is Stephen Ketchum at $1.7 million. And is Stephen Ketchum at $1.7 million and Provoost at $700K? Not bad. Moving along, this table shows the number of shares acquired by the named executive officers upon the exercise of stock options and vesting of restricted stock units in fiscal year 2024, as well as the value realized upon exercise or vesting. This table shows all stock options they currently hold. The company does not offer any defined benefit pension plans or non-qualified deferred compensation plans to its employees. Next up are change of control and severance arrangements outlining what happens if an executive leaves or if the company is acquired. The key takeaway here is that these executives can potentially get a lot of money if the company changes control or if they are terminated. A disclosure mandated by Dodd-Frank, the PO to median employee pay ratio was approximately 21:1. The following chart sets forth the relationship between compensation actually paid to our POs, the average of compensation actually paid to our non-PO NEOs, and the company's cumulative TSR over the 4 most recently completed fiscal years, and the Nasdaq Biotechnology Index over the same period. Finally, the report of the Audit Committee. This committee is responsible for overseeing the company's financial reporting and audits. So what's the story here? Amarin is a company that's trying to turn things around, focusing on international expansion and cutting costs. They have a decent amount of cash, but they are facing challenges in the market. Their executives are well compensated, but the company is trying to align pay with performance. One thing to notice is that this turnaround story that we keep hearing has been happening for a while now without any major success. It's tough to say for sure where Amarin is headed. They have a solid product in VASCP Evergay, but they need to execute their strategy effectively to unlock its full potential. Keep an eye on their progress in Europe and their ability to manage costs. Thanks for decoding with me. If you found this helpful, be sure to like, comment, and subscribe for more corporate deep dives.